So I'm gonna hit you with some physics today. There's a law that says if a principle works in one arena and you put it in another arena, it still has to be true. This explains why price action works in any market. Let's go deeper. Hey guys, how's it going? JD here. Isn't that an interesting law I just pointed out? You know, that hey, if a principle works in one arena, it's still going to be true in another arena. And it makes perfect sense when I think about price action. That's exactly why price action works on any price chart, because it still works. It's going to be true wherever you take it. So I would just like to point out that I personally started price action trading in the futures market. My mentor trades futures. He doesn't trade Forex. He doesn't trade binary options. He trades futures. And that's where I first started to trade price action in the futures market. But if we just put price action here in a YouTube search. Okay, so all these guys here, Mr. Patrick, I don't know his name, the trading channel, Freedom Shortcut. And I haven't really watched these people. I'm just saying what I do know about them though. They're all in the Forex. See, you know, price action trading, daily forecast, Forex visit. See, these people are trading price action or some form of it, the moving average. I can't pronounce his name, but this guy, you know, they trade some type of price action. Here, look, price action strategies, you know, some form of it, and they're in the Forex, right? And then you come back to me, who started in futures, and when I was in the Forex, I was trading Fibonacci, but you know, again, we just showed all these people who are trading. Where am I going? I'm just going to some weird. I'm just hitting buttons over here. Yeah, so I started, and we just showed all these people who are price action traders, and they're in the Forex. You know, I just happen to be the first. I just happen to be, maybe, I don't know. I haven't been through every YouTube channel, of course, but I may be one of the first price action traders who just happened to go into the binary options market. And, you know, I've created a strategy that works. But, you know, the strategy part is just the 1 minute chart and the 3 minute trades. That's kind of my personal strategy that I created for binary options. But everything else is still basic price action, you know, using the 21 EMA. I got that from when I was in futures. Waiting until prices make it to the 21 EMA and look for second entries, higher lows, breakout pullbacks, range fades. All of that is price action concepts that will work anywhere. You see what I mean? So somebody in the comments that asked me to actually create a course for Forex, and I was kind of thinking about that already. I was already leaning that way, and then the more and more I thought about it, I'm probably not going to do it. Sorry, I'm probably not going to do it, because the course that I've already created will already work in the Forex. You know, so you just have to take the main parts of it. You just need to take the fundamentals of my course and then apply it to the Forex, you know, because the only thing that you're going to have to add is, you know, where you want to put your stop. That's kind of it. And of course, in the Forex, you got to have the correct lot size. You got to have your math right. All the stuff that I'm glad I ain't got to deal with no more. That's why I'm in binary options market. So somebody could take my course, just learn the fundamentals, because the fundamentals is price action fundamentals. It's not fundamentals of binary options. It's fundamentals of price action trading. Like if I go to my site, the course is price action trading system. So it doesn't matter whether you're in the Forex or futures or binary options, it doesn't matter. These fundamentals, the market cycle, the rule of two, Japanese candlesticks, you're going to see a Japanese candlestick in any market you go to. You know, when you pull up a price chart, how to use the 21 EMA, you know, everywhere might not have a zigzag indicator, but you really don't need it anyway. You know, how to box up a range, trend lines, understanding signal candles, entries, how to count legs, support and resist. All of this is just fundamentals of trading. That's just fundamentals of price action trading. So you don't have to, I don't need to make another course, basically is what I'm saying, for Forex. Just like my mentor didn't show me how to use price action in binary options. I just took the fundamentals, moved it over to binary options, and voila. Because if a principle is true in one arena, it'll be true if you place it in another arena. It's a physics law. Just found that out, but it makes perfect sense of why you can take price action anywhere. So the things that I'm teaching on this channel, the fundamentals that you learn in my course are proven, time tested, and the biggest benefit is that you could take it anywhere. That is such a major benefit because, you know, at the end of the day, I ain't like futures. It was some things I didn't like about it. At the end of the day, I really didn't like Forex. There was some things I didn't like about it, but I found a home with binary options. Go figure, you know. But if the binary options market just disappear one day, guess what? I'll slide right back on over to Forex. I can slide right back on into futures. You know, I'm actually still dabbling in futures just a little bit. They got some new stuff I do, like event-based contracts. But anyway, that's for another video. So yeah, I mean, that's the power of learning price action trading. You know, the price action principle, you know, price action principles, you can take anywhere that you want to. You know, I haven't tried the options market yet, just the regular options market. Hey, we may need to look into that because again, price action will work anywhere. All right. So I just wanted to drop that on you today. But let's do a quick work study lesson. And of course, hang in to the end because we're definitely going to do a bonus. So please like right now. Look out for your boy. Also subscribe if you haven't. You know, we teach every day, every video, you know, no fluff, good teaching over here. So you may want to subscribe. So let's get into that work study lesson. Hey guys, JD here. So this is a great work study lesson today because I don't know how long I've been doing these work study lessons, maybe 3 weeks, if not 4. Maybe I think we kind of passed a month now that I've been doing these work study chart lessons. And this is the first range I've seen. This is the first rangy day. So this is excellent training here because I haven't shown you guys how to trade in a range. So basic rules of range trading. You wait for prices to make it to the top of the range. You wait for prices to make it to the bottom of the range. Those are the rules. Now, you don't actually even have to have a setup. The fact that prices is now at the bottom of the range or the top of the range kind of is the setup. But if you can see a setup at that area, just like if you can see it set up when it gets to the 21 EMA, that just makes the trade even more powerful. But technically, or per the rules, you don't even have to have a setup. You just have to wait for prices to get to the top or the bottom. So, you know, you can't see what was happening behind here, but I drew the range based off of some moves that previously happened back here. So when you come off the top here, you know, and also the zigzag really helps in this situation. This is actually a trend down, trend break, retest new low. And then we hit the bottom of the range. So we got a little rejection, close, you know, decent signal candle, didn't close on this top, but it's decent. I like it. You go right there and it's off to the races. Or if you were being conservative and seeing this hammer up here, it's like, oh, that's a beautiful hammer up. I know we're coming to the top. Take that too. Because the thing about the range fades, and that's a range fade. The thing about a range fade is that your target is the other side of the range. So you can enter, you know, this, I like entering right off the bottom, you know, a touch off the bottom, but you can enter a little higher here because again, your target is way up here. Okay. So then we move up, trend break right here with this big old candle, retest to a new high. Now we don't touch the top, But when this candle breaks higher, traps everybody going long, and surges down like this, humongous candle, nearly close on this low, I like it because, again, the target is the bottom of the range down here. You take that, easy win. 1, 2, 3, easy homer. But then let's just keep following the rule of 2, because that's basically what this thing is doing. So then we get a trend down, another trend break, all right? And then boom, it drops again. Now you actually could have, this is actually, I was about to say this is second entry short, but it's too choppy. But when you seen this rejection right here in this candle, ooh, that's tempting to go. Here's why I didn't mark it though, because I left out one very important rule. You do not enter in the center of the range. So anything in here is suspect, and it's just tough because I know you want to take it. So even with range fade trading, there are rules and you have to be disciplined. So as much as you may want to take this, and it worked easily, I don't take trades in the center of the range. This ain't quite in the center, but it's awful close. It's awful close. Anything could have happened. This thing could have kept working higher. So that's just a range rule. You take it off the top, you take it off the bottom, you stay out of the middle. So you can't take this trade. And then it drops like a rock because this is a trend down, trend break. It's retesting to a new low. And then here, you don't take this candle, although it's bouncing off the EMA. You may just lose this one, to be honest with you, because you may take that. And I understand if you did. But it didn't break higher than this candle. And neither did this one. Neither did this one. So that's why you may take this. And hey, it may just be a loser. But I don't like it because it's basically inside bar. See, this whole bar is inside of this one. This is not an inside bar. This one broke lower, trapped everybody who was going short. That's the difference. Inside bar, broke lower, trap. That's the difference. So I don't take inside bars. And then this thing broke out strong. Okay. Now you got a breakout. So you actually can't take this entry. Now this broke lower and trapped some people, but you can't take it because this is a breakout. This could easily pull up and drop down just like it did. Now you would have won 1, 2, 3. You would have escaped, but on a breakout, now we got to wait and see. Maybe prices are going to keep dropping. It broke out, but no, it didn't. This one surges back into the range, but no entry. It just took off on you. There was no way to enter unless you entered on this bar, which you could have. I could have marked this. I could have marked this because that this trend up, trend break, retests. This market cycle is over. You broke strong back into the range, and your target is up here. Yeah, I missed that one. I missed that one. Oops, wrong type of arrow. Yeah, I missed that one because you got a trend down, trend break, breakout, fail breakout, and usually when you get a fail breakout, you're definitely going to the other side of the range. So definitely could have marked this one. It surges back into the range, very strong, closed on this top. Your target is up here. Yeah, that's fine to take that one. That this cycle is over. Yeah, this candle here, this candle here has a lot of potential, and it was a homer. 1, 2, 3. All right. So then it goes up, and then you get 1, 2, 3 legs back. All right. And then it gets a low, push up, higher low, breaks lower, traps everybody going short because this market cycle is over. And the next target is way back up here again. This is a nice, perfect candle. Broke lower, trapped everybody going short, pushed up, closed on its top, closed back on the other side of EMA, closed higher than the body to the left. I like it. And that's the homer too. 1, 2, 3. Okay. So now you got to trend up, trend break, retest the new high though. So you got to be careful up here. And so I'm not, again, now we're past the center of the range. I got to wait for prices to get up here. So I'm not taking anything here, but then it can't even make it. It just plunges again on you. So you just can't do anything. It just plunged on you too fast. Now you got a matching bottom here, but again, we just broke out that range again. So we don't know what's going to happen. It looks like there's a ton of sale pressure. So I'm not buying yet. I'm not buying yet. I'm not doing anything until we get back inside the range, which we do right here. So now we got a low, push up. This is a higher low, broke lower, trapped everybody going short, pushed up, didn't close on its top, but closed higher than the bar to the left. I like it. You can take that one, 1, 2, 3. Or if you want to be even more conservative and be like, I don't know, you know, this thing could make a second leg like this down, which it could have. But then when this one searches down, like that's what was about to happen. But then you got all that rejection stem. Look at that rejection stem. Closed on its top, closed higher than the bars to the left, closed on the other side of the EMA. This one is money. Also, you can see trend up, trend break. You're expecting a retest. You're also respecting the prices to get to the top of the range. That's the beauty. You take that, 1, 2, 3. Then we get to the top of the range again. It broke out. Came back, broke out again. You may have been looking at this as a breakout pullback entry, but what I haven't said though is the overall trend was kind of down. So a lot of times you may get a trend down range for a while and then break lower again. So I'm not taking this. I'm not taking this. I'm just waiting to see what happens. And this signal candle here, this rejection here was a sign. Definitely don't go long. Definitely don't go long. Now, then when this candle surges down, closes lower than everything to the left, almost closes on this bottom, huge, humongous strong candle. I already know we are heading back to the bottom of the range. Okay. Take that right there. Homer. 1, 2, 3. So off the top win. Even this one would have won. Off the top win. Off the top. Well, no. Yep, this one would have won too. Off the top win, off the top win, off the top win, off the bottom win, off the bottom win, off the bottom win, off the bottom win. This is why you enter at the bottoms or the tops of ranges. Then we break out, came back, tested the breakout area, couldn't get back in it. Shot down. Now you got a high, push down, lower high off the bottom of the range. But look at the size of this leg. So we're expecting another leg of this distance now. Because we're out of the range now. So now we're thinking maybe the trend down is about to start. I like this trade. 1, 2, 3. Then you get another one right here. High, push down, lower high. Tried to test the range again, bounced right off of it. Didn't close on this low, but did close lower than the bar to the left. I like that one too. 1, 2, 3. Then if you don't like either of those, you get another one right here. This is a humongous candle. Again, you're still expecting a leg of this distance. I like that one too. 1, 2, 3. That's it. That's range fade trading. That's range trading. You take your entries off the top, you take your entries off the bottom, and you should be good. So this was a perfect lesson for today because we have not seen a range in a while, but that is exactly how you trade one. All right. So thanks for hanging in this long. Please like right now if you have not done it. Take care of your boy, and subscribe also, of course, and share and let everybody else know that we got some good teaching going on this channel. I greatly appreciate you. Appreciate all the comments. And so as normal, of course, I got a trade bonus for you for hanging in here this long for me. So let's jump into that. And I'm signing off. My name is JD. And as always, I wish you increase on the Sutton. Bye-bye.
A piece? We need real pieces to fill in this house. How about you? Get me.
Push down, push down. Let's run, let's run. The bottom is down here. The bottom is down here. Let's go. Push it out, push it out. Catch a home run here. We're gonna catch a home run here. Push down, push out, push out, push out. Push out, push out. Closing your low, 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 closing your low. Push, push, push. Push, push, push. Rejection, rejection. Rejection, rejection, rejection. Rejection. Hold the line, hold the line.
I did press up, Mom. Press up, press up. Down low, down low.
Yep, keep pushing. Push down. Closing your low. 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 Great close. Push down. Push down.
Push down. Close up. Push down. Close up.
See the momentum. Push down. Push down. Hold the line. Hold the line. Hold the line. Push it down. Push down. Push down. Hold the line. Hold the line. Hold the line.
Push up.
Push down.
Push down. Push up.
Push down.
Push up.
No, say down, Titan. Say push down.
Push down.
Push down. Push down. Push down. Push down. Hold the line. Hold the line. Push down. Push down.
Push down.
Push down. Push down. Push down.
Push up.
Push down. Say push down.
Push down.
Push down. Hold the line. Push down. Push down. Push down. Hold the line. Push down. Push down. Yay, we got it. Push down. Great push.
Great push. We did it.
We did it. All right, thanks for tuning in. Please subscribe if you haven't already, and if you got time today, learn some more price action. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye.